What's up, guys? It's Japa Rico here. So today we're going to talk about Japa Rico reacting to other traders, and let's bring Raja Banks. For you who speak Portuguese, you probably don't know him, but if you speak English, and especially if you live in the US, a lot of people know him. He has thousands and thousands of followers, and he has a very interesting opinion about risk management. Actually, I share the same, more or less, actually it's the same opinion with him. So let's check it out. Just a few seconds and let's start it.
So before we talk about what's full margin, when to go full margin, why you should go full margin, we need to understand what really risk is, right? So whenever you're executing a trade, you're making sure you're applying the correct risk, because if you're not applying the correct risk, if you're not following a set risk management program, your trading results are really going to suffer at that point. Now,
yes, so I always say to you guys, right? So you have to have a system, and in that system, you have to follow a set of rules. Here he's calling a risk management program. And basically, it's a set of rules that you have to follow, and especially he's going to talk about the percentage that you have to apply to that system. So let's continue. And it's very interesting, guys, because if you don't follow a system, if you don't follow this risk management program, it's more likely that you're going to blow your account.
for me personally, I use magic keys to apply risk management to my trades. Normally, in our community, what I tell our students is to focus on 1 to 2% risk.
Yes.
Because what's going to happen is if you're focusing on 1% risk, this means you have a bigger number of trades to fail for you to blow your account. If you focus on 2% risk, now you have a little bit smaller number of trades to blow your account. But if, let's say, for some reason you have a $100 account or you have a $500 account and you're focusing on, okay, you know what, I'm going to risk 10%, you can blow your account in 10 trades, 9 trades, 8 trades. So you don't have to go through that route, which is why.
Yes, so this is what is really risky, and I always say to you guys, like, a lot of people were like, oh, Japa Rico, I just spotted this opinion, like this trade, I just spotted this opportunity, and I think, right, I think this is going to go well. And then I'm like, so what makes you think it will go well? And then they're like, oh, just because I can feel it. Like I have the feeling, and I'm like, no, it's not like that. You need to have a set of rules. You have to have a system, and you have to stick to this set of rules. You have to have discipline. Okay, so always think about discipline. Discipline in trading, you have to stick to this set of rules. You have to follow this set of rules to a T, okay? Because if you don't, then you're just like deviating from your system, from your management, from your risk management. Once you deviate from your system and then you risk like 10% of your capital, you just have a few trades to blow your account. And you don't want to do that because, because you don't want to do that, right? You don't want to risk all your money in just a few trades. If it's 10%, it's too much, right? And sometimes I even, like, you know that I get messages on my Instagram account all the time, and I've seen people who even risked like 100%, like all the capital they had in one single trade. Hard to believe? Yes, it's hard to believe. Does it happen? Unfortunately, yes, it happens. So those people know nothing about risk management, and that's why I share the same opinion with Raja Banks. I always say to people here on my YouTube channel and elsewhere that only like from 1 to 2% only. Like, you don't risk more than that. Okay, so let's continue.
And another thing I tell people is that if you're really going to come into trading, especially Forex, where you have, 100 to 1 leverage and you have 200 to 1 leverage. Some brokers give you 500 to 1 leverage, which is still okay if you can manage risk.
If you can manage,
you get 1,000 to 1 leverage. At that point, you're really using a lot of risk. And then what happens?
Yes, and then you have to understand, like, why, right? It's very interesting because a lot of people when they see like some brokers even give you a thousand times, okay, 1,000 times of leverage, and a lot of people think, oh, that's so great, right? Because I can use 1,000 times the money I have, so I have a lot of chance and a lot of opportunity to make a lot of money. That's what people think, but they forget about the risk. Because if it's 1,000 times leverage, that means that with only a few trades, you can very easily blow your account. And people don't think about when the trade goes wrong. They only think about the part when the trade goes well. If this trade is successful, then I can make $1 million. That's all they think about. But they don't think, okay, if this doesn't go well, then I'm going to blow my account. They don't think about that part. So they don't think about the risk. They only focus on making a lot of money, but they don't know how to manage the risk. So, and a lot of brokers, they know you're going to fail. Okay? Why? Because more than 90% of traders fail. Only 10% or even less than 10% actually make money. So, when you open an account, it's for the interest of the broker to put a lot of leverage, because the more leverage they give you is more likely that you're going to blow your account. So that's how it works. It's a conflict of interest, but that's how it works. And let's see. Whoops.
What happens is your account is at a huge risk of getting wiped out. So
Wiped out. And this
is
is what I say all the time. So it increases your chance of getting wiped out.
Number one thing is we have to understand what risk are we going to use for our account. Now,
yes.
I tell people all the time in the beginning, if you're starting out, it's really important to focus on 1 or 2% risk
yes.
per trade. And the biggest reason why is that when you're focusing on 1 or 2% risk, you're really kind of like understanding the moves of the market. You're understanding the pair that you're trading. You're understanding when price is moving in a certain way.
Yes.
Also, if you lose, let's say 2 trades in a row and you've risked like 1% per trade,
yes.
you've lost 2%. Now,
yeah. So if you're like risking 2%, like 1%, okay, per trade, and you took like 2 trades and they went wrong, you are only losing 2%.
When you've lost 2%, you can also look at that trade, look at that loss, and really ask yourself that, okay, what could I have done something different?
Yes.
Was there something, some confirmation I missed? Was there a candle I didn't look at? Was there a time frame I didn't look at? Was there no volume in the market? So all these things, then you can learn from it and come back the next day much more stronger and wiser in the market. So
it's very important to look back and see what went wrong. And I say to you guys all the time, like you have to have like some kind of feedback, some kind of brainstorm, and look at your past trades. And every time you make a mistake and see, like every time the trade goes against your direction and you lost some money, and then you have to do some kind of review and see, okay, what went wrong on this trade? And if I change something, okay, maybe sometimes you even think about changing your system, right? But then you have to be very careful, because you have to understand, if I change something here on this trade, okay, it would have gone well if I change this. But if I change this and apply this to my system, will that work for future trades? Or this change, when I apply this change to this specific trade, it only affected this trade and it was good for this trade, but for future trades it will not be. Okay, and how do I know that? You know that by applying this change to do some kind of back testing. So get past data, apply those changes to this past data, and if it works on this past data, probably is going to work on future data too. Nobody knows, and nothing is for sure. Nothing is for sure, but back testing is very important, because at least you have an idea of how your system is going to perform in the future. But nothing is guaranteed. You know that, I know that, we all know that, okay? And in trading, everything is about probability all the time. But if you don't do back testing, that is really dangerous. So I always say to you guys, do some back testing whenever you want to change something, and make sure that this not only works for this trade that you lost money, but is going to work and work and work again and again. And this is what we call consistency. Because if your system is not consistent, then probably it's more likely that you're going to end up blowing your account again and again. Okay? So what did you guys think about Raja Banks? Did you like this reaction video? Let me know in the comment section below, and hope to see you guys soon. Bye.